Imagine realizing that you are overpaying on your monthly expenses by thousands of dollars each year. Well, that's exactly what happened to me and what's probably happening to you too. And the wild part is we agreed to it. Now, most people don't even know that this is happening because it's everyday expenses that they don't even pay attention to, but are silently robbing them in their budget every single month. So in this video, I'm going to expose exactly what those expenses are so that you can keep more money in your pocket and start building wealth, starting with the most egregious one of them all, which is insurance premiums. Here's the thing, insurance is probably one of the single biggest expenses in your budget that you probably don't pay attention to or know that you're overpaying for. So here's what happens with most of us. We get our insurance for our car and our home, and we are paying on that insurance. We expect some incremental increase in rates, but nonetheless, we keep going. We think that as a loyal customer, the company is going to look out for us. But the exact opposite is actually happening when it comes to these insurance companies. The longer that you actually stay as a customer, the more you're actually going to pay, and it's what's called loyalty tax. Here's the thing, these companies are using algorithms to determine just how much you will be willing to pay before you actually take action, look for another insurance company for a lower rate, and make the move to switch. So as long as you're not paying attention to it, they're going to keep increasing your rate and charging you more right underneath your nose. And here's the thing, the average American pays around $200 a month for car insurance and around $2,500 a year for home insurance. So that is $5,000 a year leaving your budget just in insurance. But here's the thing, if you literally just spend 20 minutes comparing prices, threatening to leave your insurance company, and actually switching, you can stand to save hundreds, if not thousands of dollars. There was literally a consumer report that showed 92% of people who switch insurance coverage will save money. The average was $450 up to $1,000. And I know this personally because my husband and I did this exact thing this year, and we saved $1,200 on our home and auto insurance combined. That is literally $100 a month that's now being added back to our budget that we were overpaying in insurance. And not only did we save money, but we actually got more coverage than the previous insurance provider. So here's the thing, set a reminder to shop around for insurance coverage before your next renewal. By doing so, you are going to save money. The likelihood of you saving money is 92%. So if you want money back in your budget, and if you want these insurance premiums and companies to stop robbing you every month, you need to shop around and eventually switch over to an insurance company that's going to give you a lower rate and hopefully more coverage. Now, speaking of switching, the next thing that you may want to also consider switching is your cell phone plan and cell phone provider. Now, be honest, when's the last time you checked your cell phone plan to see if you are overpaying? Probably never, because you did what most of us did. You got an unlimited plan and you never thought about it since. And here's the thing, you know that it's expensive because you pay it every single month, but you haven't checked to see how expensive it's been in comparison to what you could be paying. But here's where the math is not mathing. The average smartphone user only uses about 19 to 21 gigabytes of data per month. That's a long cry from unlimited. So that begs the question, why are you even paying for an unlimited plan? So you are literally paying for data that you're not even using. These cell phone companies are literally robbing people blind. But the thing is, we signed up for it. But literally by switching to a discount carrier who use the same towers as the major cell phone carriers, you can save money. With some of these carriers, you can get coverage for as little as $15 to $25 a month. Now, at a minimum, by switching to a discount carrier, you are saving anywhere from $50 to $60 a month, which is around $700 a year that you're saving just from your cell phone bill. So here's what I want you to do. For the next 3 months, I want you to go into your cell phone and I want you to actually look to see how much data you're actually using. Now, if you're using enough to move down from unlimited, by all means, reduce your plan with your current provider, or simply just switch over to a discount carrier so that you can actually save money on your cell phone bill. There's no point in paying for data that you aren't using. So instead, compare the numbers, decide whether or not you're going to downgrade or just switch carriers so that you can save money. Now, if you thought the cell phone company and the insurance company were robbing you every single month, wait till you find out what's happening when you go to the doctor with these medical bills. Now, here's my hot take when it comes to medical bills. Do not pay them on time. I know the personal finance educator is telling you not to pay your bills on time, but there is a reason that I'm telling you not to go pay it the moment that it comes in the mail or that you see it in your My Chart. Now, Now, if you're like me, you do want to pay your bills on time. You don't want to have any kind of outstanding debt. But here's the problem when it comes to medical bills. When you get that bill from the doctor's office, in some cases, they are sending you an estimation of the cost and not the actual amount due after the insurance is filed. So in my case, I have been preemptively paying my bills just because I wanted to get them out of the way, only to find out that I've overpaid because they have not filed the claim with insurance yet. And so in those cases, it took months of back and forth to be able to get a refund for the money that I've overpaid. I want you to avoid that situation at all costs. So instead of immediately paying your medical bills that come from your doctor's office, wait until you get what's called the estimation of benefits, or EOB. And that's going to tell you exactly how much you owe after the insurance pays their part. Do not pay the bill before you get the EOB. Wait until you get that statement telling you exactly how much you need to pay the doctor, and pay that and nothing more. Now, some doctors do require that you pay a portion up front, and if that is the case, when you get that estimation of benefits, I want you to compare it side by side to the bill, only pay the balance that you need to pay, and if you have overpaid in any instance, which has happened to me before, you immediately request a refund. Now, when you do get your bill, request an itemized statement that outlines exactly what you're being charged for, what it's being coded for, so that you can check with your insurance company, because there are times when things are coded wrong and you may be charged for something that's covered by your insurance. Ask me how I know. So just keep an eye on those bills. Make sure you're only paying what you need to pay. Otherwise, they may sneak some additional fees in there and you're going to pay for something that you shouldn't have paid for in the beginning, and it's going to be a hassle to get that refund back. Now, with that said, you might need to go see the doctor when you realize how much this next expense is costing you, and that is going to be your car payment. Your car payment is probably the most expensive decision that you are paying for each and every month. But here's the problem with it. The moment that you drive that car off the lot, it is no longer worth what you are paying for it. It immediately decreases in value the moment that you get the keys. And the thing is, it keeps losing money every single year, but guess what? Your car payment stays the same. So by default, when you purchase a car, you are automatically overpaying on that vehicle for what it's worth every single month. And with the way that financing works on cars now, with way longer payment terms, most people are actually underwater when it comes to their vehicles, meaning they owe more on the car than the car is actually worth. Now, in order to fix this expense, this is something that you have to evaluate personally. You need to answer the question, is my car payment disproportionate to the amount of income that I bring in every single month? So a good rule of thumb is that your transportation expenses, including your car payment, your insurance, and gas for your car, should not exceed 15% of your income. So if you're realizing that you are spending way more than that on your vehicle, you need to have a come to Jesus moment and decide whether or not this vehicle is actually worth having, because it's literally taking money from your budget every single month. So if you're over that threshold, you need to decide whether it's worth selling the car, trading it in to find something a lot less expensive that you can pay off sooner, or simply just buy a car cash. Now, I'm going to tell you, if you do have a car payment, driving a paid off car, whether or not it's your dream car or not, is one of the fastest ways to free up cash in your budget every single month. Now, the goal of having this vehicle is so that it is an asset to your life and not just a liability that's draining your budget. And speaking of budget, if you don't already have a budget that's showing you exactly how much these expenses are costing you each month, you can certainly grab a free copy of my budget template by commenting budget below or clicking the link in the description. Now, this next expense is something that actually may not show up in your budget, but it is the main culprit when it comes to taking your money. And that next expense is going to be interest. So every time you have a balance on your credit card, or you make the minimum payment on your car payment, or you keep deferring those student loans, you are accruing interest, and that is the silent stealer of your money. Interest is not just pennies. Over time, you're talking about thousands of dollars in just interest, not even the principal amount. So interest is that silent, sneaky thief that's coming in and stealing your money if you are making the minimum payment, having outstanding balances, or if you keep just deferring your debt payment. So the first step is actually knowing how much you're paying in interest. So I want you to grab those statements from your car payment, your student loans, your credit card, any other kind of debt that you have, and I want you to look at that statement and see see exactly how much of that money is going to interest. That number added up is how much extra you are paying to your lenders for the debt that you have. And seeing that number alone should literally make you aggressively want to pay off your debt. At least that's what it did for me. Once I saw how much over the principal amount that I was paying just in interest and how my debt wasn't going down, I got aggressive about paying off that debt because it was literally robbing me of money every single month. Getting out of debt is the fastest way to give yourself a pay raise in your budget each and every month. And I actually have a book, Dump Debt and Build Bank, where I lay out exactly how I paid off over $78,000 in student loan debt to become debt free the first time, and the steps that you can take to literally eliminate debt from your budget so that you can free up cash and so this interest can stop robbing you every single month. To grab your copy, just comment book or click the link in the description. The important thing is that every debt that you eliminate is money now being added back to your pockets every single month. Now here's the thing, recouping the money that's being taken from you every single month is just the first step. Once you have that money back in your account, you actually need to start making it go to work for you. So check out this next video where I show you exactly how to leverage your money to start working for you.